Welcome to the Depth Dive. Today we're jumping into something that's making waves, these 2x leveraged ETFs tied to MicroStrategy.
That's right. We're looking at MSTX and MSTU.
We've got analysis from a few different places, some in English, some originally in Chinese, all trying to unpack these.
Yep. Different perspectives on the same pretty complex financial products.
So our mission today is to really get under the hood. What are these things? How does that leverage actually work? And, what's the real potential upside and downside?
Exactly. We want to cut through the complexity, look at the mechanics, the performance, and crucially, the risks. Give you a clear picture of the good, the bad, and who should maybe, just maybe, consider them.
Okay, let's start there. MSTX and MSTU. You said they're 2x leveraged. 2x of what exactly?
Right. So MSTX is the Defiance Daily Target 2x Long MSTR ETF, and MSTU is the TRX 2x Long MSTR Daily Target ETF. Both aim to give you 2 times, or 200%, the daily return of MicroStrategy stock. That's ticker MSTR.
Daily is the key word there, I'm guessing.
Absolutely. We'll come back to why that's so important. MSTX is from Defiance ETFs. MSTU is REX shares and Tuttle Capital Management.
And these aren't ancient history, right? They popped up relatively recently.
Yeah, pretty new. MSTX launched August 2024, started at 1.75x, actually, then bumped to 2x in October 24.
Okay.
MSTU followed in September 2024. And what's really notable is how fast they grew.
How fast?
By late 2024, MSTX had something like $1.8 billion in assets under management AUM.
Wow.
And MSTU was even bigger, around $3 billion. That's a lot of money chasing this leveraged exposure pretty quickly.
Okay, $3 billion for MSTU. So the goal is double MicroStrategy's move each day. How do they actually do that? Are they just buying tons of MSTR stock?
See, that's the interesting part. No, they don't just hold twice the stock. That's like a super important distinction.
Okay.
They mainly use derivatives,
Hmm.
things like swaps, options, basically contracts that give them exposure to MSTR's price swings without having to own the stock directly, or at least not all of it. This lets them amplify the moves.
Derivatives. Okay, so not simple stock holding. That sounds
Definitely.
complicated.
It definitely adds layers of complexity and, its own risks. But the really critical piece here, it's the daily reset mechanism.
Daily reset. What's that?
It means the leverage, that 2x target, it gets reset every single trading day.
Ah.
So over time, like weeks or months, your total return isn't just going to be double whatever MSTR did overall. It can drift quite a bit because of that daily compounding. We need to dig into that more.
Okay, got it. Definitely not a set it and forget it kind of thing. So MicroStrategy.mstr. Everyone links them with Bitcoin now. What's that connection and why does it matter for these ETFs?
Right. MicroStrategy basically went all in on Bitcoin. Huge corporate strategy move.
How much are we talking?
As of September 2024, they were holding around 402,000 Bitcoin. Valued at over $41 billion back then.
Billion with a B. Okay.
Yeah. So because Bitcoin is such a massive chunk of their assets, MSTR stock price is like super tightly correlated to Bitcoin's price.
So MSTR moves when Bitcoin moves.
Pretty much. And interestingly, MSTR stock itself often shows about twice the volatility of Bitcoin. It's already kind of leveraged in a way.
Okay, so MSTR is like Bitcoin on steroids, volatility-wise. And these ETFs then layer on top of that.
Exactly. You got it. So if MSTR is already roughly 2x Bitcoin's daily move, and MSTX and MSTU aim for 2x MSTR's daily move.
Wait, so they're effectively like 4x Bitcoin's daily move interactively.
Yeah, on a daily basis.
Yeah.
It's a powerful multiplier. Can be amazing if Bitcoin's ripping upwards.
But terrifying if it drops.
Precisely. Huge potential, huge risk.
Okay, 4 times Bitcoin daily. Wow. So 2024 was a monster year for Bitcoin, right? Went over $100. How did MSTR and these ETF do?
Yeah, 2024 was huge. MSTR stock itself surged over 542%. Just massive gains, driven by Bitcoin going from like $45,000 up past $100,000.
So the ETFs must have flown.
In the short term, yes. They delivered those amplified daily returns. People made significant money if they timed it right.
Any specific day examples? Like how did that 2x play out?
Sure. Let's see. One source mentioned October 14, 2024, MSTR stock went up 5.3% that day.
Okay.
And the ETFs, MSTX and MSTU, gained around 9.5% and 10.6%. So roughly in that 2x ballpark for the day.
Right, makes sense.
And another data point showed MSTU up about 257% over a 6-month stretch at one point.
Pretty impressive gain.
It is.
Absolutely.
And this is but that same source noted more recently, MSTU was also down around 70% from its peak. 70%.
Oof. Okay, that 70% drop snaps things into focus. That leverage cuts both ways. Hard. Let's talk about those risks. We heard about volatility decay. What is that? Sounds bad.
It is bad, especially for longer-term holders. Volatility decay. Okay, imagine MSTR goes up 10% one day.
Great day for the 2X ETF, up 20%,
That's
right?
right. But then the next day, MSTR falls 10%. Now, MSTR itself is basically back where it started, maybe a tiny bit lower from the compounding, but essentially flat over 2 days.
Okay.
But the 2X ETF, it loses 20% in day 2, but it's losing 20% from that higher value it reached on day 1.
So the 20% loss is bigger in dollar terms than the 20% gain was.
Exactly. So even though MSTR is flat, the 2X ETF ends up down. That's volatility decay. In choppy, sideways markets, these things can just bleed value over time because of the daily reset math.
So even if MSTR bounces around but goes nowhere overall, you could still lose money holding these.
Correct. And sources mentioned, people on social media specifically warning against holding these long-term because of this decay effect. It's a well-known issue with daily leverage products.
Okay, that's critical. What about tracking error? You mentioned the ETFs were around 2x MSTR's move on that October day. Do they sometimes miss the mark by more?
They can, yeah. That's tracking error. The sources gave a couple of examples from November 2024 for MSTU.
Like what?
Okay, one day MSTR dropped 1.9%. You'd expect the ETF to drop about 3.8%, right?
Yeah.
Double that.
Makes sense.
But MSTU actually fell 6.2% that day, significantly more than 2x.
And the other way?
Yep. Another day, MSTR jumped 9.9%, huge gain. You'd expect MSTU to be up almost 20%, like 19.8%.
Okay.
It only gained 13.9%, so it undershot the 2x target on the way up that day.
Why does that happen? Why don't they hit that 2x perfectly every day?
Well, a few things can be going on. One potential issue is liquidity in the derivatives market for MSTR, swaps and options.
Okay.
If it's hard to trade the exact swaps they need, maybe they have to rely more on options. And options pricing is more complex. It's affected by volatility expectations. Bid-ask spreads can be wider. All that can nudge the ETF's return away from the pure 2x target.
Does the size of these ETFs play a role? You said they got pretty big, like $5 billion combined.
That could definitely be a factor. That's called market capacity constraints. Trying to manage $5 billion worth of daily leveraged exposure through derivatives, it might get harder to execute trades efficiently without moving the price, especially in those less liquid MSTR derivatives compared to, say, S&P 500 derivatives.
So they might be forced into using more options, which introduces more potential for that tracking error.
Plausibly, yes. It could exacerbate the issue.
Okay, so we have volatility decay, eroding long-term returns in choppy markets, and tracking error, meaning you might not even get the exact 2x on any given day. What other big risks stand out?
Well, the main one is just the leverage itself, right? It's the whole point, but it's also the biggest danger.
Amplified losses.
Hugely amplified. A 10% drop in MSTR means a 20% drop in the ETF.
Yeah.
A 25% drop in MSTR means a 50% drop in the ETF. Your capital can get wiped out incredibly fast if MSTR has a bad run.
Yeah.
Plus, there are costs, fees, financing costs for the leverage. Those constantly eat away at returns, too.
I saw some analysis mentioning a chance of these things blowing up. That sounds dramatic.
Yeah, some estimates put the chance of a major loss of capital, like approaching zero, somewhere in the 20% to 50% range within a year. It depends heavily on MSTR's volatility. Sustained choppiness, even without a huge crash, can just grind these down because of the decay in costs. It's like death by 1,000 cuts.
That's sobering. Anything else?
Briefly, there's counterparty risk. You're relying on the institutions providing the swaps and options to fulfill their end of the deal. If they go bust, it could impact the ETF.
Right.
And maybe most fundamentally, owning MSTX or MSTU is not the same as owning MSTR stock. You get no shareholder rights, no voting, nothing like that.
Yeah.
You're purely making a short-term bet on the price movement, amplified daily, not really investing in the company long-term.
Okay, so given all of that, I mean, the potential for huge gains, but also volatility decay, tracking error, massive loss potential. Who on earth are these actually for?
Yeah, it's a very, very specific type of person. We're talking sophisticated traders. People who really, truly understand leveraged products, understand derivatives, are comfortable with extreme volatility.
And are watching it like a hawk, presumably.
Constantly. This is for active short-term speculation. Maybe someone who's incredibly bullish on MSTR or Bitcoin for like the next few days or weeks, and has the risk tolerance and, crucially, the capital they can afford to lose.
What defines that sophistication? Just knowing what leverage means.
Oh, much more than that. It's understanding the daily compounding math, how options pricing works, implied volatility, and being brutally honest about your own risk tolerance and financial situation. It's not for dabbling.
And who should absolutely stay away?
Pretty much everyone else. Definitely anyone who's risk-averse, anyone investing for the long term, the decay, makes that unviable. And absolutely anyone who isn't 100% clear on how leverage and derivatives work and the potential for rapid large losses.
Mhm.
If any of this sounds confusing, these aren't for you.
Fair enough. So if someone does fit that niche profile, that sophisticated short-term trader,
Yeah.
did the sources give any advice on how to trade these things?
Yeah, the advice is pretty consistent. Focus on very short holding periods. Use stop losses religiously to cap your downside. Have to take profit targets to lock in gains.
Don't get greedy.
Basically, don't put a large chunk of your portfolio into them. Diversify.
Yeah.
Watch Bitcoin trends like crazy because that's the underlying driver for MSTR. And frankly, if you like MicroStrategy long term, the suggestion is just buy MSTR stock directly. You avoid all this daily leverage complexity and risk.
How do these compare to other leverage ETFs out there, like, say, TQQQ for the NASDAQ? Are MSTX and MSTU riskier?
The analysis suggests yes, they're likely even more volatile.
Why?
Because the underlying asset, MSTR, is already incredibly volatile thanks to its Bitcoin link. TQQQ tracks the NASDAQ 100, which is volatile, sure, but generally less so than MSTR.
So it's leverage on top of an already highly volatile stock.
Exactly. And look at TQQQ's history. Massive gains sometimes, but also brutal drawdowns. It shows the inherent danger of leverage. MSTX and MSTU are like that, but potentially dialed up even further because of the MSTR Bitcoin factor. It's a really high-octane way to get crypto exposure indirectly.
High octane is one word for it.
Okay, so bringing us to today, May 20th, 2025. What's the backdrop? Where are Bitcoin and MSTR now? Well, Bitcoin cooled off a bit after hitting those highs above $100 late last year. Saw some volatility early this year, but it's still, historically very elevated, near those all-time highs.
And MicroStrategy.
MSTR obviously benefited hugely in 2024, but it also had that sharp correction, maybe 30% or so, back in November 24. It reminds you it's not a one-way street.
What's the general feeling out there about these ETFs now, like on social media?
Seems mixed looking at platforms like X. Still excitement about the potential upside for sure, but also a lot more chatter about the risks, the decay, the warnings, maybe a bit more caution creeping in than when they first launched.
And looking ahead, what moves these things?
It's still mostly about Bitcoin's price, right? Macro factors, regulation news, general crypto sentiment that all feeds into BTC, which feeds into MSTR, which then gets amplified by these ETFs, and of course, whatever MicroStrategy itself does regarding its Bitcoin strategy.
That sustained high Bitcoin price, even with bumps, really keeps the potential energy both up and down in these ETFs, doesn't it?
Absolutely. The stakes remain very high.
Now, you mentioned looking at some analysis originally in Chinese. Did that offer a different take, or was it similar?
Interestingly, it was largely singing from the same hymn sheet.
Yeah.
It confirmed the basics. Yep, these are 2x, daily long MSTR ETFs.
Okay.
It really hammered home the warnings about high volatility and the risks of daily leverage, especially that difference between daily 2x and longer-term performance because of decay.
So, same conclusion about suitability.
Pretty much.
But
Much better for short-term speculation, definitely not long-term investing. It also flagged the tracking error concerns and the factors behind them, just reinforcing that both the potential gains and the potential losses are significantly magnified. No major disagreements there.
Okay, so let's try and boil this all down. If someone's listening, what are the absolute key takeaways from this deep dive on MSTX and MSTU?
Okay, bottom line.
Right.
These ETFs give you a shot at supercharged short-term gains linked to MicroStrategy and indirectly Bitcoin. That's the lure. But it comes with a hefty package of risks. You've got volatility decay eating away returns over time, especially in choppy markets. You've got tracking error, meaning you might not get that perfect 2x daily return. And you have the raw power of leverage itself, which can lead to huge, fast losses.
So know exactly what you're getting into. And just to be crystal clear again, who might possibly consider these and who absolutely should not?
Might consider a very small group of highly experienced active traders focused on the very short term with a deep understanding of leverage and derivatives and a very high risk tolerance.
And who shouldn't?
Almost everyone else. Long-term investors, people who are risk-averse, anyone who doesn't fully grasp the mechanics and dangers of daily leveraged ETFs. If in doubt, stay out.
Right. So as we wrap up, let's leave our listeners with something to chew on, a final thought.
Okay. Given everything we've talked about, the extreme volatility, the complexity of the derivatives, the daily resets, how might some unexpected shock hit these things? Like a sudden, deep, prolonged Bitcoin crash or maybe a major regulatory clampdown nobody sees coming?
How would that ripple through these already sensitive instruments in ways we haven't even considered.
Exactly. And what does the existence and popularity of products like this tell us about risk appetite in today's market, and maybe the challenges of truly understanding the complex risks we take on, especially in fast-moving areas like crypto-linked assets? Something to think about.